Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. I've got another of my commentaries on the junior markets. I'll be talking about some companies that I see have pending news, some that have had some news, and some that I think have much higher to go. What I'll start with is I want to talk about the market movers in general, and for metals, that's the US dollar. Where the US dollar goes, gold and silver and other metals go the opposite direction. So when the US dollar is under pressure, the price of gold, silver, copper, other metals go the opposite direction. So let's start with the US dollar. I'm going to bring up the screen share here, and here we go. All right, so we're just looking back to about this time last year. The US dollar was down around 94 and change, went all the way up to 114, has since been correcting, had a little bit of a rally, and then is correcting again. So what have been the drivers of this has been the Federal Reserve raising interest rates relentlessly in 2022. I've said for a while that I think that they're at the point of breaking things. We've seen that in the housing market, in auto sales, big ticket items. We've also got the consumers out there that are using their credit cards to make ends meet, and they have to pay 19% interest rates. And for a long time that I've been talking about this, the Federal Reserve was sort of ignoring these things breaking. But my feeling is that their favorite child is the banking system. And we're in a crisis, a banking crisis that I believe is just getting underway. This reminds me of the asset-backed commercial paper implosion that happened prior to the 2008 economic crisis. These are systemic problems that have a domino effect. And the idea that the Federal Reserve, the FDIC, and the Treasury are able to backstop all of these depositors' money at banks is kind of remarkable, that they would even say that. You're talking about $18 trillion. If the Federal Reserve and others were to try and backstop that, it would lead to the biggest money printing and debt creation in history. And we've been in that for a long time. Now, what I see happening is I don't believe that the Federal Reserve is taking proper responsibility for causing this problem. And they caused it in a couple ways. You had, from 2008 until 2022, you had 14 years of near zero interest rates that the economy and the housing market was built upon. And then in a very short period of months, they jacked the rates up to what is now near 5%. So when you have that prolonged a period of interest rates being so low, it's a shock to the system when you jack it up to 5%. And I think that they're just starting to see the cracks, not even the big problems from the banking system. And another thing that I don't think they're taking responsibility for is the oversight. After 2008, there was supposed to be oversight by the regulatory bodies for the banking system. They really haven't done that. If you look at the assets that a lot of these smaller banks have pumped into their assets, it's a bunch of very long dated bonds and mortgage-backed securities. and that are underwater now that the interest rates have been up so much, and they're not being marked to market. So not only are they not being realistically valued on the balance sheet, one of the methods that the Federal Reserve is using is to take those underwater bonds and lend money at 100 at par for the value of those bonds, even though they're dramatically underwater. Now, any loan or any pawnbroker would never give you a loan at 100% the par. It's like paying retail for a good that you can't get the value out of that, and yet they're doing that. That's pumping up the balance sheet of the Fed to now they talked about quantitative tightening, where they were going to try to reduce their balance sheet, and now it's almost right back up to where it was prior to them doing the quantitative tightening. And I really think the end result is that the Federal Reserve has to stop raising interest rates. They've just done way too much damage trying to fight inflation. I think that they painted themselves into a corner, that the only way out of that is to allow the inflation and the economy to run hotter than they feel comfortable with, and try to grow their way out of this severe problem that they've created. And again, if you don't recognize that you've caused a problem, how are you ever going to fix the problem? And that's where we are today. The Federal Reserve has not taken any responsibility for oversight of the banks, and have put them into a bad position by raising interest rates so aggressively after a prolonged period of time, with the U.S. or the interest rate so low for 14 years. Okay, so how is this playing out in the market? As you can see, after the banks started to tumble, led by Silicon Valley Bank and others, the U.S. dollar has come down quite significantly. I would point back to here and look at this correction that we had happening. You saw a death cross here. You saw a very poor January effect reading, and then it got a bit of a bounce in February and starting into March, and now it's trading below the 50-day moving average. And the 200-day and the 50-day both look like they're going to be going downward. And this is very bullish for the price of gold. Here's the gold chart. And as you can see, it bottomed, a triple bottom, right around the time, not long after the US dollar started to correct. Then it had a very dramatic run from around, what was that? You came from 1620 all the way up to 1970 some. And then the US dollar got stronger, so it went under pressure, had a double bottom, and has now bounced off that double bottom as the Federal Reserve, or as the banking crisis has moved into the banking crisis. As you can see here, gold is trading almost $100 above the 50-day moving average, and over $200 above the 200-day moving average. And the 200-day moving average is now starting to get bullish, and the 50-day moving average is on a very bullish trajectory. So I believe that we are seeing that transition where the US dollar got short-term overbought in a bear market, and that affected negatively the price of gold. And gold had a short-term correction in a bullish bull market that started back here in early November. Okay, Another key metal that I follow is copper. And the reason that I follow copper with gold, gold is a driver of sentiment towards basically the entire metals complex. And by extension, the stocks in the metals stocks tend to follow the sentiment towards it follows what is happening with the price of gold. So I think gold is now at a sort of a important inflection point at the 2000 mark. And I think we're only days away from it breaking significantly above the 2000 mark. But copper is kind of the gold of base metals. And where copper goes, often other base metals go. And so keeping a close eye on copper is very important to me. And what you can see here is in November, early November, it was trading at about $3.38. Had a very strong move into January where it topped at about, well, you could say this was the top. So let's say around 430. It had a golden cross. And then in February, when the US dollar was gaining strength, it actually showed a lot of relative strength in that it didn't really drop that significantly. It was more of a flatlining trend. It did drop in March, but has since made another strong rally, and right now is trading exactly on the 50-day moving average. So some of the things that I don't think many in the market, the generalists especially, understand how tight the supply is for copper. You know, in the past, the London Metal Exchange, COMEX, and other places where producers, you know, store or send their copper for trading, it would have, you know, several weeks worth of daily supply needed or daily demand needed, and it could service that for long periods of time. And now copper is right about at the daily consumption. The inventory is sitting at about the daily consumption of copper worldwide. That is a very precarious position. And this is indicative of a short-term situation and a long-term situation. On the short term, I think that there's many catalysts that could cause the copper price to blast off. One of those is that, you know, whenever copper gets strong, Chile, which is a major producer of copper, the workers there tend to go on strike. And this can, the way the inventories are now, this could have a very dramatic effect. It often has a significant effect when the Chilean miners go on strike, the copper miners go on strike. Where the inventories are now, it could have a dramatic effect. Longer term, there's a big supply problem. For many decades, you know, there's been under exploration and new mine development that has weakened the supply chain to the point that we are now having very low inventories, one-day kind of inventories in the metals warehouses. And there's strong demand. As the electric vehicle revolution is happening, they're consuming a lot of copper. I think that will only increase in the future. And another thing that I don't think a lot of people really understand is that in order to power those electric vehicles, especially in the United States, you've got a very old and ancient power grid that needs to be rewired. And so that's going to consume a lot of copper. All of these other countries, the developed countries, are in similar positions. They need to rewire their power grids. And then you've got the emerging economies that need more and more copper, such as China, because they're modernizing their world, and as they modernize, they need more copper. Another thing that I think the general world out there doesn't understand is just how important metals are to make all of these modern day products that we have attainable. Without the miners, without the mining of copper, you don't have a computer, you don't have a telephone, you don't have every electric device, you don't have electric vehicles, you don't have vehicles. You need copper in this world, in a world where the venture capitalists will throw money hand over fist into the latest, social media apps so people can share cat pictures. They'll spend billions on those kind of companies, but they won't spend billions on the raw materials that are needed in order to make technology and innovation happen. Which just boggles my mind. But I believe we're coming to a situation where more investors and generalist investors are going to start to figure this out. The automobile companies are already figuring it out. At the recent BMO conference and the Prospectors and Developers Association of Canada's annual conferences, these are two big conferences. They kind of happen back to back. Automobile manufacturers were showing up at these mining conferences, and that's never happened before. Around the time that they were happening, McEwen Mining, which I'm going to talk about soon, has a copper division called McEwen Copper, and they were able to attract a big investment, about $150 million investment, US dollar, from Stellantis. Now, not a lot of people may know the name Stellantis, but they sure know the cars that they make, such as Dodge and Chrysler and Jeep and Maserati and Fiat and all these Citroen and all these other cars. And they want to be able to secure their future demand, future supply needs. And this is a trend that I think you're going to see more of. We've already seen it start to happen somewhat in the lithium space for car makers that are getting into lithium. I think you're going to see that happen more in copper and other minerals that are needed in order to make electric vehicles. Okay, so let's get on to some companies. And one of the first ones I want to talk about is a company called i-80 Gold. They had a very strong move here that was caused because they announced a bonanza grade CRD discovery in Eureka, Nevada. And not only does it have your high grade silver, lead, zinc, it also has extremely high gold as well. And this makes for some of the highest in situ metals values of any exploration for any metals being found anywhere in the world. They came under some pressure in early 2023. They did go through a golden cross in December here. Then they bottomed out at around the 200-day moving average in March, and then they've been moving with gold ever since. And as of today, traded above the 50-day moving average. And I think you're going to see both the 50-day and the 200-day moving more bullish again. So some of the catalysts that I see for i-80 Gold, the big catalyst I see for a lot of gold and metals stocks is gold getting stronger. As it gets stronger, the sentiment towards junior miners and developers gets more bullish as well. The sentiment starts to get a lot stronger. So that's one key driver that I think can move their stock valuation higher. But the most important catalyst is drilling results. And they've been doing a bunch of drilling on their bonanza grade CRD in Eureka, Nevada. And they have a whole bunch of pending drill hole assay results to come out. I think that they could be coming out anytime now, possibly even next week. So they're a catalyst-rich company for the short term, and in the long term, I believe they have the assets to build this company into a multi-billion-dollar company. They have world-class assets at their Granite Creek project, at their Ruby Hill Gold project, at their Ruby Hill Bonanza CRD. They have regional exploration that they're doing right now in Ruby Hill on some very big geophysical targets that I think are going to be very exciting news coming out. They even have a project called McCoy Cove that for any other company, it would be a company maker. It's over 1 million ounces of high grade gold. And it kind of falls into the third top project for them. So they're project rich. They've got the infrastructure to process the refractory ore that they're going to be producing at Granite Creek, McCoy Cove, and at Ruby Hill Gold Zone. And then they also have infrastructure at Ruby Hill that could process that CRD material that they're drilling into. Because it's already built and permitted and has a less capex to get it back running, they could see, I believe they're on the path to being one of the highest growth production profile of any of their peers. And it's in Nevada. And those kind of companies are the ones that get a premium. When you're aggressively growing your production, those are the kind of miners that get a significant premium. And so I strongly believe that i-80 Gold is a cornerstone holding for investors that want exposure to gold. I believe that the downside risk is minimal and the upside risk is quite substantial. And so it gives you access to a gold holding that you know, for those that are more risk averse, is a wonderful cornerstone asset, because right now they're trading at quite a bit under $1 billion, and I think they've got the assets to grow them into a $5 billion or more value company in the next few years. Okay, so now I've got one that is sort of a mix of gold and copper, which is McEwen Mining. McEwen Mining, I just had an interview recently with Rob McEwen that you can find on my YouTube channel at Rocks and Stocks News at YouTube, or on Substack at rocksandstocks.substack.com. As you can see here, they've been on a pretty tremendous run since back in September. Right around here, I had another interview with Rob McEwen, so I kind of got close to the lows there, right around the low fours, and now it's trading at 1170-ish today. And as you can see, it's been on a pretty tremendous run of late. Went through a golden cross in late December. The 200-day moving average is now on an upward trajectory, and as is the 50-day moving average. The stock is trading over $2 above the 50-day moving average and $5 above the 200-day moving average. This is a power chart. And why it's a power chart is because of what's been happening mainly, well, twofold. At their gold operations, they had a couple of years of challenging times that saw their stock get down to these lows. But they've been turning the corner on the mining operations on their gold mines. They're bringing the cost down. They're getting better grade control. They're getting lower costs. And all of these things are excellent developments when you're trying to turn around a gold mining operation. But what really has put wind behind their sails is the copper project called McEwen Copper. Now, McEwen Mining owns 52% of McEwen Copper. And so as McEwen Copper has good news, it tends to reflect in the price of McEwen Mining. And what's been the good news that they've had out of that I think has generated a lot of this big move for the company is that they Rio Tinto has a venture called Nuton, and it's kind of their technology for mining venture. And what they have is a leaching process that they believe will recover more copper from their copper project in Argentina and do that faster. So higher recoveries and quicker recovery. That goes right to the bottom line. So they pumped in I think it was around 20 million, which they then started to evaluate using the material from McEwen Copper's project to use in their technology. And after they had that going on for a couple months, they pumped another big chunk of money, and I believe it was around 30 million the second time around. And uniquely, on the same day that they announced that Nuton, the Rio Tinto venture, was going to put more money in, Stellantis, the car maker that, not a lot of people know the name Stellantis, but they certainly know the brand of cars that they make: Dodge, Jeep, Maserati, Fiat, Citroen, and a bunch of others. So they're a household name as far as the brands that they make, but not the umbrella of Stellantis is not well known. But Stellantis pumped $150 million into McEwen Copper because, again, they are ahead of their peers in that they're trying to secure the supply that they're going to need to produce the electric vehicles that they want to produce. And so those two events have kind of really helped out the stock as well again recently. So now it's let's go back a year, it's now getting close to the yearly highs. And this power chart that's been developing, I think, is going to take it a lot higher. Rob McEwen and I had a really good conversation a few days ago that I recommend you look up on YouTube. And we talked about the things, the drivers that are catalysts that can move them to much higher valuations. And I believe that this company is very undervalued. I think just on their gold turnaround of their mines in a stronger gold market, because I believe their production cost is about $1,400 all in sustaining costs. So at 1,900 or 2,000, it's all pure gravy from here. And so they've got a good story on the gold, and then you're basically, as far as I'm concerned, getting most of the copper for free. So catalysts going forward in the immediate horizon is copper and gold getting stronger. There's just, I would recommend you go listen to the interview that I did with Rob McEwen, and I think they will be catalyst rich over the short term and the long term. So I believe they're on good footing here since September, October, and they're going to be headed a lot higher. Okay, so speaking of Rob McEwen, who is a mining legend, Rob McEwen just there was an announcement out by one of my sponsors called Dynasty Gold. Dynasty Gold announced today that Rob McEwen is going to be investing $1.2 million into Dynasty Gold. And this is very exciting for me I picked them up back early in 2023 because of the high grade discovery they made of an orogenic gold system in near the town of Dryden in Ontario. So when I'm looking at an orogenic gold system, first of all, you need these big structural, big cracks in the earth. They're called crustal faults, and they go very, very deep. And that's the conduit that the gold-bearing fluids use as a path of least resistance to make their way close to surface. Then you also need the right age of rocks. These greenstone belts are that they're in are very important. Then, of course, you need the high-grade mineralization. Now, often when I follow an orogenic gold system exploration project, it takes a while. First of all, near surface, yes, you can get hits of very nice high-grade gold. But this is the extension of an orogenic gold system that you're in. And the further you get away from the heat engine, the gold is more fine-grained. And so you don't get that concentration of very coarse gold that is the jewelry boxes that make orogenic gold mines so spectacular. So a couple of analogies for you is, one is the Fosterville mine in Australia. For 20 years, it was mined near surface and in the fine-grained gold, and it was a marginal kind of mine. Then they drilled deeper, and they found, I believe it was somewhere between 700 meters and 1,000 meters, they found the bonanza grade gold, where it's very coarse, super high grade. Kirkland Lake started mining the Swan Zone. It made them one of the lowest cost producers and very high grade, so super high margins. Their stock blasted off. It was one of the best performing gold stocks and ultimately led to them getting bought out, and the shareholders made off like bandits. And another fantastic orogenic gold system is actually not very far from Dryden in Red Lake, Ontario. That's the Red Lake mine. Now, when Gold Corp had that mine, they had to go down about now that, again, it's similar to the Fosterville story. Many years of near surface mining that was sort of marginal. And then they got down to about 1,000 meters, 800 to 1,000 meters, and boom, they started hitting these massively high grades. And again, very low cost of production, very high grades, huge margins. And at the time that Gold Corp was mining those bonanza grades, they were one of the best performing gold mining stocks. So these are important orogenic gold systems. One is over in Australia, another is in Red Lake, Ontario. That's not very far from Dryden, where Dynasty has their orogenic gold system. So let's look at the checkbox that Dynasty has already found. They've got one fault, one of these big cracks in the earth is at the northern end of their claim blocks. And then going right through the south is a parallel crack or fault that is the conduit. And right at the right where the greenstones and other rock packages are come into contact and where the fault is where they found some spectacular assay results. There's been 4 holes drilled into this zone that starts at about, let's say, 90 meters and continues down to about 160 or 70 meters. So one hole hit high grade, step over about 30, 40 meters, spectacular grade. They had a 1.5 meter intersection of 246 grams per ton of gold. And that was included in part of a 3 meter intersection of 151 grams per ton gold. Then you step over to the next hole. So that's how these zones line up in an orogenic. You want to see the continuity. And they hit one hole here, one hole here, one hole here, one hole here. And all 4 of those holes had high grade to bonanza grades of gold. And so you're starting to see continuity in 4 drill holes. And then below that, they had another 1.5 meter intersection of about 60 grams per ton of gold. So what it looks like is you've got 2 parallel zones there that likely meet up as they go deeper. So now that they're raising $2.8 million with 1.2 million of it coming from Rob McEwen, they can continue to follow those 2 zones deeper. And that gets really exciting because they're close to surface, which is the furthest extension from the heat engine. And they're already getting these bonanza grades, and likely in the fine gold grain portion of an orogenic gold system. So as they get deeper, you would expect, in the model says that they would be starting to hit coarser and coarser gold as they get closer to the heat engine that caused all this extreme high grade mineralization. And on a final note, nobody really understands orogenic gold systems quite like Rob McEwen. They found that deep zones and mined it. So he knows what these things look like. And the fact that he's putting $1.2 million into Dynasty, I think is a very good, how do you say, litmus test or stamp of good good housekeeping stamp of approval. And so I'm very excited about the company. I picked them in early January. I think they've got a fantastic future ahead of them. Catalysts to move the stock forward. Gold gets stronger. I think it's a rising tide lifts all boats, and some boats will get lifted more than others. This company has a very tight share structure. I think around 50 million shares fully diluted, and a very cheap valuation, less than $20 million Canadian. So that's one catalyst, gold getting higher and bringing more investors into the junior gold exploration space. And then with this money, they'll be able to get back drilling on the Thundercloud project. And that can happen very quickly. And the good thing about Dryden is you can drill year round there. So once they get started, I don't think they'll stop. So that's the Dynasty Gold story. And the next one is Summa Silver. Summa Silver just about a week ago became a sponsor of my website or my reports. And the reason that I invited the company is they've got 2 tremendously high value copper or high grade copper or silver projects. One of those is in New Mexico. The other is in Nevada, and it's around Tonopah. Tonopah was a very important Nevada. When Nevada was known as the gold or silver state, it's actually still considered the silver state. Silver was important before gold production was important, and Tonopah was one of those important silver mining camps. So right now, the company is awaiting assay results, additional assay results from their New Mexico project. In fact, when they came on board as a sponsor, I wrote an article about the company on my Substack. So just go to rocksandstocks.substack.com, scroll down, and you'll find the article I wrote. And what I included in there was one of their cross sections. that shows where the historical mining was, and then all the high grade hits that they've hit around it. And they're in the process of growing that deposit quite dramatically. I also included a table of grades, and it shows you the reported grades that they've already reported, which are very spectacular. And then they've got another group that are pending from the New Mexico project. I also included in there some core pictures. This is an epithermal vein system, and there's certain things that you need to see in an epithermal vein system that suggests that it's been what's called a long-lived system. It's kind of like water flowing in, like a boiling pot of water. And when you see the banding in the core, that suggests that they have a very long-lived system. And so that's why you get these bonanza grades like they have found. And so I included that. And then I included a table that shows you the spectacular high-grade highlights from their drilling on their Tonopah project. So I would highly recommend you go read that article so that you can understand why. It was a welcome to our sponsorship program article, and I included a lot of good images in there for you to get a good understanding of the quality of projects that they have both in New Mexico and in Nevada, focused on high-grade silver. So some of the catalysts that I see for this company are silver and gold getting stronger. It's going to bring more attention. People will be looking around for gold and silver exploration stocks. And this one has a hell of a discovery in New Mexico at their Mogollon project, and also at their Tonopah project in Nevada. And really, there aren't a lot. I would love to be covering more silver companies. The problem is that there's not a lot of great ones out there. So I only have, I think, about 4 or 5 silver-focused companies to cover in my reports. And that sort of makes for a bullish argument as well, in that, you know, if you can't find a lot of explorers and developers in the silver space, it tells you something about the supply chain now and into the future is going to continue to stay weak. But then it also, when investors want access to silver stocks, they don't have a very big menu to look at. And this one is an excellent story to look at. And I think that their stock is very undervalued and will head a lot higher as they start to generate more news from sort of how it will go is they've got the pending results from the New Mexico project. I think there's about 8 more holes to report from New Mexico. Then shortly after that, they'll start drilling in Tonopah, which is another high-grade silver target where they've already had success and they understand where to go to have more success. And then as they're waiting for assay results from Tonopah, they'll be ready to start drilling in New Mexico again. So for today through to the end of the year and beyond, I think you're going to see an excellent news flow from this company. They're a new sponsor, so I haven't had that initial interview yet as a new sponsor, but I'm working on getting an interview with Galen McNamara, the CEO of the company, very shortly, so stay tuned for that. Okay, and the final company today that I want to talk about is 9 Mile Metals. So 9 Mile Metals has been drilling a target that they call their 9 Mile Brook project, which is in the Bathurst mining camp of New Brunswick. This is one of the third most important VMS mining camp in the world. And back here, when the stock blasted off, they were talking about the discovery and grades at their 9 Mile Brook lens. very high grade, 10 to 20 meters of a lens that outcrops, and they were finding over 10% copper in this, which is quite spectacular numbers of not just copper, zinc, lead, silver, and gold, your classic metals in an orogenic, or I mean in a VMS deposit. So then around here, they drilled into 20 kilometers away from that 9 Mile Brook lens. They drilled and found a group, about 4 or 5 holes drilled into massive sulfides, very shallow, right at the top of a system, and hit massive sulfides with excellent grades in it as well. So now they've got 2 new occurrences in an old, important mining camp, and it's your classic story of going into an old mining camp using modern technology and modern exploration methods, and making important new discoveries of massive sulfide occurrences in this case. And both of those remain open to find the source of where, because you're looking at the extension of a volcanogenic massive sulfide, you're not looking at the primary part of a massive sulfide deposit. And so now they're drilling, they've gone back to this successful area in near their 9 Mile Brook lens, and they're poking holes around looking for the source of that 9 Mile Brook lens with this thick intersection of a lens with very high grade in it. And they didn't report any assaying results, but what they did report a couple days ago was that they have submitted around 700 meters of core off to the lab for rush assaying. Okay, so when you're drilling into a vein or several other kinds of deposits, you may not know exactly what you're looking at as far as mineralization. In the case of massive sulfides, everybody that knows anything can look at that core and they know what massive sulfides look like. The fact that they sent in 700 meters of core for rush assaying, it tells me that there's a high probability, almost a certainty, as close as you can get to a certainty in exploration, that they've hit massive sulfides. And so now those assay results are pending. So one of the big causes of delays in getting assay results back is because of the time it takes and pressure that's on labs to do what's called sample preparation. And it's actually not the assaying itself that causes the delays, it's the sample preparation. And they're using a lab in Moncton, which is a less busy lab than the bigger ones out on the West Coast or in Ontario. And they can do the sample preparation very quickly. Then they send that concentrate off to Vancouver or one of the bigger labs that they're involved with, and then the assaying gets done in a matter of a few days. So I think that they could have assay results back within 2 to 3 weeks. That's what they said in their news release. Now, a lot of companies say that and they can't deliver on it. The reason that I believe that they will is because I know that they're using one of these less busy labs to do the sample preparation. And so I think that they will be on schedule. And I'm quite optimistic about those assay results because as I said, massive sulfides in the core is very easy to see. And I'm sure they didn't send 700 meters off for rush assaying, which can cause 3 to 4 times higher than normal assaying timeframes, unless they saw some massive sulfides. So stay tuned for news from 9 Mile Metals. All righty, folks. So that was my show for today. I'm almost always opening with what's going on with the US dollar and the price of metals, because You know, those are the real sentiment drivers. And as we get better sentiment towards the metals, I believe that that's going to bring, generalist investors into the metals space, and by extension, they're not just going to look at the metals themselves, such as gold and silver. They're also going to start looking at the gold, silver, copper, and other metals stocks. And where we are today is very reminiscent to me of the year 2000, which was the precursor to the 2001 to 2011 bull market in gold and other metals. And at that time, the metals sentiment was weak, and the valuations of the explorers, the developers, the miners was in the dumps. In fact, was trading at all-time lows in valuations. Fast forward to where we are now, and you're seeing very similar valuations. In fact, you could make the argument that a lot of the valuations are even cheaper now than they were, relatively speaking, than in the year 2000. And yet we're coming into a phenomenal situation where for the precious metals such as gold and silver, you've got banking crisis, you got money printing, you got debt out of control, you've got inflation. All of these things are reasons to park your money in gold and silver. Then you've got this electric vehicle revolution that's driving copper and other metals. And so we're really in a perfect storm for vast amounts of money to be made, taking advantage of these cheap valuations in what I believe is a rising metals. I think we're in the very early days of a decade or longer bull market for metals. And these stocks of the juniors, explorers, developers, and miners are like coiled springs, just waiting to launch. And it's an exciting time. I've seen it before. I saw it in the year 2000, and I think we're here again. And as always, my shows are for information purposes only. It's important for you to speak with your financial advisors to assess your risk profile and these companies that I talk about, and do your homework. A good place for you, I think a good place for you to do your homework is go to my YouTube channel at Rocks and Stocks News, and on Substack at rocksandstocks.substack.com. And you'll find all my commentary, and a lot of my commentary is interviews. And I've done interviews with all of these companies spoken about today, except for my new sponsor, Summa Silver. Which reminds me, I got to add Summa Silver onto my my sponsor roster here. But yeah, do that homework. Go to their websites, read their news releases, check out their corporate presentations, watch the interviews that I've done with management, and I think you'll understand why I believe strongly in all of the companies that I follow and talk about in the interview. On that note, have a great day, and we will talk to you soon.